Are you interested in a personal loan and wondering if one is right for you? In this video, we'll break down 3 things. First, we'll discuss some of the most common reasons why someone would want to obtain a personal loan. Then we'll review how a personal loan works. Finally, we'll wrap up by discussing the pros and cons of a personal loan. As always, if you have any questions for us, please let us know in the comments below. Before we get started, if you find Hero Banker content useful, we would greatly appreciate a quick click on that subscribe button. Okay, now let's get started. First up, we'll discuss the most common reasons why someone might need a personal loan. The first reason is to pay off or pay down debt. For example, credit card debt. This can also be debt consolidation. We'll get into this in greater detail in the following chapter. The second reason why someone might want a personal loan is for home improvements. A personal loan can give you quick access to cash, which can then be used to purchase supplies or pay contractors. In the upcoming chapters, we'll discuss more about the pros and cons of using this approach. Another reason why someone might want a personal loan is due to a life event. This can include a wedding, funeral, vacation, moving expenses, medical bills, car repairs, and more. There are some other reasons and specific scenarios where a personal loan could come in handy, but the ones that we listed are probably the most common reasons why someone would want to obtain a personal loan. Okay, now let's move on to reviewing how a personal loan works. Once again, a personal loan allows you to borrow money for a specific purpose, such as debt consolidation. Once a loan is approved and funded, your existing debt will be paid off and consolidated into one new loan. You will then repay that loan with monthly installment payments until the loan is paid off. The payment on this loan will have a fixed interest rate and a fixed payment amount every month. So a personal loan might look something like this. George takes out a $10,000 personal loan. The loan has an APR of 15% with a 5-year term. This means that George will make a monthly payment of $238 for the next 5 years. After that, the loan will be paid off. You can think of a personal loan as similar to an auto loan, but instead of the money being used to buy a car, you'll be using the money to consolidate debt. As we mentioned before, debt consolidation is not the only reason for obtaining a personal loan. Home improvements and life events are also common reasons. However, there is one key difference that's important to note. With a debt consolidation loan, the borrower never actually receives the money from the loan. Instead, the existing creditors are paid off. For example, let's say you owe $5,000 to ABC Bank at an interest rate of 25%. You also owe $5,000 on a student loan at an interest rate of 15%. So you decide to take out a $10,000 personal loan with XYZ Bank at an interest rate of 10% in order to pay off both of these loans and consolidate them. In this case, XYZ Bank will typically pay ABC Bank and your student loan directly. Once the loan is funded, you'll no longer owe any money to ABC Bank or on your student loan, and you'll then start making your monthly payments to XYZ Bank. This differs from a home improvement loan or a life event loan, because in this case, if the borrower is approved for $10,000, then the money will be deposited into their bank account for them to use as they please. So in this case, they can use it any way they'd like. So again, it's important to understand the difference between these two scenarios. Okay, now let's discuss some of the pros and cons of a personal loan. One benefit is that with a personal loan, you will have one fixed monthly payment. This usually makes it easier to pay off debt. Also, you will probably pay off your debt quicker and pay less interest. Remember, with a credit card, it's easy to fall down the rabbit hole of only making minimum payments. and this does not actually lower the amount that you owe. In fact, this can often cause the amount that you owe to increase. But with a personal loan, the amount that you owe will immediately start to decrease. This brings us to one of the cons of a personal loan. With a personal loan, you might have a higher monthly payment than you're used to. This is especially true if at the moment you're only making minimum payments on your credit card. For example, let's say you have 3 credit cards and the minimum payment on each card is $25 per month. In this case, you're only making total payments of $75 per month. But if you consolidate that debt into one personal loan, then your monthly payment will probably be higher than $75 per month. This is because a monthly payment on a personal loan is a principal and interest payment. But with a credit card, those $25 minimum payments are only going towards the interest owed and not the principal balance. Again, think about a personal loan like an auto loan. These loans tend to have higher monthly payments than a credit card. Another drawback of personal loans is that the interest rates tend to be on the higher end. Also, some personal loans can charge fees that can get pretty high. The interest rate and the fees will usually vary depending on your credit and other factors. Someone with good credit, high income, and low debt will probably be looked at as a more creditworthy borrower. This usually means a lower interest rate and no fees. However, someone with bad credit, low income, and a lot of debt will probably be looked at as a less creditworthy borrower. This usually means higher interest rates and relatively high fees. So, you might see that ABC Bank offers personal loans with an APR as low as 9.99%. But remember, it's likely that the only people who will be approved for that low rate are people with good credit, high income, and low debt. Someone with bad credit, low income, and high debt will probably get a higher interest rate. Every lender is different. Some lenders cater to borrowers with good credit, while other lenders cater to borrowers with bad credit. Usually, if a lender caters to borrowers with good credit, they will not charge a fee, or the fee will be small. But if a lender caters to borrowers with bad credit, then those lenders tend to charge fees that could get pretty high. The most common fee is an origination fee, which is a fee for processing the loan. This fee is usually a percentage of the total loan amount. So, let's say on a $10,000 loan that the origination fee is 5%. This means that the lender will charge you $500 and then give you $9,500, with the $500 deduction being the origination fee. Obviously, this eats into your total amount received, which is not great. But unfortunately, for someone with poor to fair credit, this might be the only option. Before we wrap up personal loans, we'll say this. Personal loans can be tricky. Oftentimes, if you really need a personal loan, then it can be tough to qualify for one. This is because if you're in need of a personal loan, then it's likely that you're already in debt, which a lender is going to view as higher risk. Therefore, this can make it more difficult to qualify. Okay, so that wraps up our discussion about how does a personal loan work. We hope the information was helpful and easy to understand. Please let us know of any questions or feedback in the comments below. While you're there, we would greatly appreciate a like and subscribe. If you really enjoyed this video, there's also the option for a super thanks in the comments. This provides us with some further support to help us keep producing great Hero Banker content. Our next video will be about the best personal loans for bad credit and the best personal loans for good credit. So if you're in the market for a personal loan, you'll want to check that out before applying. In the meantime, as we said, reach out to us with any questions and we're happy to help. Thank you again for taking time out of your day so that we can help you become your own financial hero. We hope to see you again soon. If you'd like to see more content like this, we would greatly appreciate a like and subscribe. Thank you.